Hello and welcome to the Kitabhshla Finance Edition, a series geared towards financially aware individuals wishing to expand their financial knowledge and portfolio. If navigating the complexity of finance seems difficult, you have come to the perfect place. Today, I will break down 7 key lessons from the book One Up on Wall Street in under 7 minutes. The innovational financial book One Up on Wall Street was written by renowned investor Peter Lynch. Lynch offers his advice and stock market investing tactics in this interesting and educational book. In selecting good investment opportunities, the book highlights the value of individual investors' characteristics such as local expertise and personal interests. The author famed financial tenet, the invest in what you know, exhausts the readers to concentrate on businesses they are familiar with and confident in. He describes how he chooses stocks, emphasizes the value of rigorous study that includes financial analysis and a keen sense of market movements. The author's book is an invaluable resource for both new and seasoned investors, offering useful guidance and real-world examples that may be helpful to people. Here are 7 galvanizing lessons from this book. Lesson 1. Invest in what you know. According to this idea, investors should concentrate their attention on businesses and sectors that they are well versed in. People can use their distinctive insights and knowledge to make wise financial decisions by investing in familiar areas. This strategy lessens the risk involved in heedlessly adopting other people's advice or market trends. The author contends that since they are better aware of regional patterns and ordinary consumer behavior, amateur investors frequently outperform professional fund managers. This technique promotes a hands-on, research-driven method of stock selection, allowing investors to assess businesses using their own views and experiences. The maxim, invest in what you know, encourages investors to become more confident and earn more informed choices and potentially achieve better results in the stock market. Lesson number 2. There is always something to worry about. The thought, there is always something to worry about, emphasizes the hazards and inherent or uncertainty come with living. Challenges and worries are a part of life, both personally and professionally. Economic challenges, geopolitical uninterest, and unforeseen catastrophes might scare investors in the financial market. Health, relationships, and job securities are frequently sources of anxiety in personal life. This persistent state of worry is not necessarily a bad thing. It can spur people on to be prepared and make wise choices. Knowing that there will always be something to worry about motivates people to build resilience, adaptability, and backup plans to successfully deal with life's uncertainties. A more balanced and proactive approach to managing both the anticipated and unexpected can result in accepting the truth. Lesson number 3. If you spend more than 13 minutes analyzing economic and market forecasts, you have wasted 10 minutes. The underlying lesson is that it challenges to anticipate with high accuracy in the financial realm, since predictions are frequently unclear and volatile. Further, detailed investigation may not greatly increase one's capacity to forecast the market after a cursory analysis to understand the fundamental trends and information. Instead, it could result in excessive tension, time wastage, and overthinking. It emphasizes the significance of avoiding getting mired down in the minute of market forecasts and promotes a more effective and focused method of financial decision making. In the end, it implies that spending more time on projections than it is necessary would not have an equivalent impact on the performances of the investment. Lesson number 4. Go for business that any idiot can run. The advice to go for a business that any idiot can run is not meant as an insult, but rather as a wise business decision. It implies that simplicity and uncomplicated processes can be desirable when starting a firm. Easy to understand and manage businesses are frequently more scalable and less prone to face difficult problems. This idea urges business owners to concentrate on models with a distinct value proposition, effective procedures, and a simple market appeal. By doing this, businesses can lower the possibility of operational hiccups, simplify the decision-making process, and draw in a wider range of potential clients. It's crucial to remember that while simplicity can be advantageous, it doesn't guarantee success, and wise business planning and execution are essential. Lesson number 5. After a great run, don't be afraid to get out early. It emphasizes the significance of realizing gains when an investment has done remarkably well, even if there is still a room for the growth. This strategy aids in reducing the dangers of market downturns or reversals, which can swiftly destroy the gains. Early exit give investors the chance to secure their gains, possibly reinvest in new ventures or safeguard their funds. It's a tactic that promotes risk management and deliberate decision making. While it may be tempting to hold on to investments when things are going well, this advice serves as a reminder to investors that neither markets nor individual assets can continue to rise in value permanently. Investors can protect their gains and maintain a responsible attitude to wealth preservation by adhering to this guideline. Lesson number 6. Don't overcomplicate. Don't overcomplicate is a valuable piece of advice applicable to various aspects of life, including businesses, decision making, and problem solving. It emphasizes the importance of simplicity and clarity. Overcomplicating things can lead to confusion, inefficiency, and unnecessary stress. In business, complex strategies and processes can hinder productivity and create barriers to innovation. Similarly, in decision making, excessive analysis and consideration can lead to paralysis by analysis. Keeping things simple and straightforward can often lead to more effective solutions and outcome. It encourages a focus on essential priorities and goals, streamlining processes and reducing the risk of errors. Moreover, simplicity tends to be more accessible and understandable for teams and stakeholders. Embracing this principle promotes efficiency, better communication, and a greater livelihood of success in various endeavors. Lesson number 7. Do your homework. Do your homework is a fundamental belief of effective stock market investment, according to the author. He stresses the value of extensive investigation and analysis while choosing assets. Instead of depending exclusively on stock tips or market trends, he advises investors to adopt an active, hands-on approach to knowing the firms they invest in. Lynch's suggestions highlight the importance of completing thorough due diligence, which includes reviewing the financial accounts, determining a company's competitive position, and comprehending the market dynamics. By conducting your research, you may be more effectively spot lucrative investment opportunities and stay away from hasty or speculative choices. In the field of investment fiction, this book is a timeless treasure. The author's profound insights provide a roadmap for ordinary investors to confidently negotiate the complexities of the stock market. This book has a permanent position on the investor's shelves, thanks to his ability to reduce complex ideas to simple principles. Lynch's insights goes beyond simple stock selections and emphasizes the value in depth study, remaining patient in face of the market turbulence, and having a contrarian perspectives. It serves as a timeless example of value of long-term investing over fads and trends. In summary, Lynch's uncomplicated guidance promotes financial empowerment and positions readers for a more knowledgeable, assured, and prosperous journey in the world of investment. Think of this book as your financial treasure chest. But here is the catch. It's not about stuffing your head with informations and figures. It's all about gaining access to that wisdom and incorporating it into your life. Books are more than simply information. They are also potent catalysts for transformation. It's not so much about what you take from that book as it is about what that book might spark within you. Now it's time to put these ideas into actions and build a way to financial success. Thank you. See you in the next book.